Welcome back, everybody, to Market Movers live from the NASDAQ market site in Times Square. Ugly start to the week on Wall Street. All three major indexes sharply lower as that rotation out of tech continues. You see there the NASDAQ now down more than 2%. Bond yields, by the way, continuing to rise and spook investors. Joining me now is Dr. Barton, Principal at Woodshaw Financial Group. Dr., great to have you with us. You know, earlier I had a market strategist on talking about how this may be more than that 10% correction. Could we possibly be heading to bear territory here in Q4?
Well, a bear pullback of 20%, I think, is much bigger than anything on my radar screen, Alexis. Could we get some more downside here? Yes. You know, we got the tech selling off really hard today on essentially the Facebook news and the potential for regulatory headwinds for the rest of the big five. I don't see this as the big pullback where we're going to go down 20% and get into bearish territory. And there's a bunch of reasons why, but the big ones are we're still awash in so much money that overcomes so much other bad news that I think that's the one umbrella that's still going to keep this market propped up for a while.
Does it help us overcome rising inflation, persistent supply chain issues, and also what's going to be coming out of Washington, D.C.? I mean, we still don't have a deal yet on the debt ceiling, Dr.
Yeah, you know, all of those things. I did not mention the debt ceiling in my notes, but I've been looking at the same things you're looking at, Alexis, and I believe the big one is inflation. But because of the Fed's stance and because they've been calling it transitory and because they keep saying moderated and other things, I think dealing with that and the impact on the markets is going to be pushed down the road a bit. The debt ceiling is kind of a wild card, especially as we get toward the end of the year. Could we get toward another fiscal cliff? I know one of your earlier guests mentioned that. I think that's a possibility. All of those overhangs are there, but the thing that I've seen over and over again, Alexis, is every time we see that, every time we get one of these pullbacks, the market participants go, yeah, but I don't want to miss out if we get another big leg up. And I think that's what we're going to see coming into the end of the year. One more big leg up before we have any sort of reckoning.
All right, let me ask, do you see us having one more big leg up, even if bond yields continue to rise? When we saw that sharp rise in yields after the Fed's last meeting, I mean, true, the yield on the 10-year is still only at about 1.5%, but it seemed to be enough to spook investors. Do you see rising yields as a trend through Q4, and is it going to continue to bother equity investors?
I will give you a yes and a no. I see those yields continuing to trend up, and then a no that it's going to continue to spook investors unless we get a big hop like we did on the day you mentioned where the markets dropped 2% across the board, across all major indexes or more. That day certainly was a bond yield centric day. Without another big hop like that, if we just keep trending up, we got to remember one of the things that tells us if those bond yields are trending up is the expectation for an expanding economy, and that is not a negative for the market. So gradual good, big discrete moves not so good as far as the equity market's concerned.
What are your thoughts on oil right now? I'm taking a look at crude closing in on $80 a barrel after that news coming out of OPEC that they're not going to change what they're pumping out on a daily basis. Do you feel like energy is a good place to park some money right now? And how do you see it playing into the overall economic recovery?
Yeah, I think we're going to continue to see elevated crude rates, and natural gas, as we know, has exploded and pulled back and exploded again. So we're going to see energy doing those sorts, staying high again, because we're seeing the expanding of the economy still. We can't ship stuff fast enough. All of the things that we're seeing in the background and the supply chain upsets will eventually moderate a bit. I think that's still going to be a bouncy picture when we're oversupplied, undersupplied, oversupplied for a few more quarters or more. But all of that says, yes, we need more energy products. That's a good thing for oil prices. And yeah, I could see putting some money to work in that sector in particular.
Before we let you go on the 30 seconds I have left, are you a buyer on a day like today? And if so, what are you looking at?
Yeah, I love these pullbacks right now, and until the markets tell me something drastically different on the technicals, Alexis, I'm going to continue to be. Anytime you get the big techs pulling back like this, I like to take a swing at those, a nibble at those as they pull back. But some of the other places I think that are looking continually good, heading into hopefully some sort of infrastructure bill. Every time we get a pullback in the industrials and the materials, I think that's a good place to be going into the new year.
All right, Dr. Barton, thanks so much for being with us. Appreciate it.